Now, this hypothetical person is 29. They're another 20-something years away from their prime earning years. Maybe there will be some money to play with. So that's where we're going. So again, as a young investor, I think our role is contextualizing the experience, contextualizing the behavior to understand how it turns into something in the future and to keep you on that path. Next phase is, what do you do with somebody who isn't new? What do you do with somebody who is 30 years old and making $300,000 a year and also has generational wealth at their back? And now they're saying, I got money to play with. It doesn't hurt me if this goes away. And to me, the obvious answer is alpha, which is in some ways seen as outsized returns. We were just somewhat laughing about how that's not necessarily what alpha is, but that's the understanding. Some people would look at these companies we're talking about where all this money's been funneling up until this week and go, oh, look at all my alpha. Well, that's not alpha. That's not a calculated move. That's hype.
That's somebody played the, what do you call it? The thing that goes around with the ball.
Roulette.
Yes.
Roulette,
And they won one time.
Yeah.
And they were like, I'm a genius.
Yeah.
That's
so we understand that there is a demographic for that. And quite frankly, this is an open conversation between us and anybody watching this. We're curious what in your mind would justify coming to an office like this, because we have a handful, and as far as I know, they're happy. They're not going anywhere. But I wonder for myself, if I wasn't working here, what would I want out of this office to justify me coming in here and giving us my money? And part of that is the alpha conversation. Is there a calculated or a thoughtful way to go about that? Because again, if this money can't hurt me by disappearing, I'm interested in doing that. The other part of it is the psychological aspect of generational wealth, and it's understanding that yes, part of this money going away can't hurt you. All of it going away can certainly hurt you. So we, I think, need to position people like this. That's a big part of the conversation. Is again, part of this money is still survival money, and it doesn't even have to be. I'm not talking fixed rate survival money. I'm talking thoughtful market investments.